Good evening. My name is Gordon Britton. I'm the director of the Burton K Wheeler Center. I was asked during the dessert reception we just had, and this is entirely typical, I've heard about the Burton K Wheeler Center often, but what exactly is it that you people do? And the answer to that is simple and straightforward. We're the public policy forum at Montana State University. And our charge is to educate and inform the people of Montana about basic public policy issues in the hope, and this hope is, in fact, sometimes, if not always realized, that these issues are going to be resolved. And I think we've played a major role in the resolution of at least some issues over the years. I wanted to speak very briefly before our keynote this evening about three people. First person is Burton K Wheeler, for whom the center is named. He was, as some of you know, longtime Montana senator, along with Mike Mansfield, the greatest political figure in Montana in the 20th century. I've been looking at this book, Darkest Before Dawn, Sedition and Free Speech in the American West, Clemens P. Work. I can really recommend it to you. It is about the passage of the Espionage and Sedition Acts, first in Montana following the First World War, and then the Montana Acts became the template for federal legislation. What makes this work so timely is that Burton K. Wheeler was U.S. Attorney. He thought these acts were unconstitutional, and he refused to enforce them. He was asked to resign, which he did. At that time, he thought that his political career was ended. 4 years later, he was elected to the United States Senate, served 4 terms, and a number of major pieces of legislation have his name attached to them. This is about Burton K. Wheeler. He's the hero of this book. And in carrying on the work of the center, we're trying not simply to perpetuate his memory, but to carry on his legacy. And I want to talk very briefly about his son, Edward, who honored his father's memory and really made possible the creation of the center. He was a brilliant lawyer. He was involved in every major railroad reorganization in this country in the 1950s and 1960s. And he defended, among many other groups, the Crow tribe in Montana against attempts to take away from them what was rightfully theirs. We're very fortunate we have tonight B.K. Wheeler's granddaughter and Edward Wheeler's daughter, Kendall, and we have, I don't know where he is, Bradley Snow, who's Edward's grandson, and B.K. Wheeler's great-grandson, and Robin Asqueta. I don't know if she's here now. She's a granddaughter of Edward Wheeler and a great-granddaughter of B.K. Wheeler, and Hillary Wheeler Smith, who is a granddaughter of Edward Wheeler and a great-granddaughter of B.K. Wheeler. And it's wonderful to have these Wheelers, because not simply are they a reminder of B.K. himself and his great son Edward, but because they're just as firmly committed to Montana and the open and free discussion of the public policy issues that face us, as Edward and B.K. were. And I want to say just something very briefly about Maxine Johnson. Some of you knew her here in Missoula. She was our longtime chair of our board, just as she was the chair of the Mansfield Foundation Board. I don't think that I've ever met anybody who had more to do, certainly nobody outside public office holders, who had more to do with moving the Montana agenda forward. She was committed to the state in so many ways, and very recently, suddenly and very unexpectedly, she passed away, and she's very much missed, and my guess is that she had some very close friends among those of you who are here tonight. She's an absolutely wonderful person. So we celebrate 3 lives. I want to introduce my good friend, who needs absolutely no introduction, a member of the Burton K Wheeler Center Board, Dorothy Bradley. Thanks.
Welcome, everyone. The banner slogan of Fannie Mae, if you look on their website, is, "We are in the American dream business." And that is, of course, increasing the opportunities of Americans to own or rent a home. It's a very interesting entity if you look in the other information that they provide, because Fannie Mae doesn't provide loans, but rather helps lenders provide more loans and are also in the partnering of community development organizations. Also, I thought most fascinating is that they were a public entity originally created by Congress in the New Deal era in 1938, and then later on became private and publicly owned. So you can imagine how fortunate we with the Wheeler Center felt when we were able to get as our keynote speaker Ann Segrist McCullough. Ann joined Fannie Mae in 1999 and is presently Fannie Mae's Senior Vice President and Deputy General Counsel of Housing and Community Development, HCD. And in this position, she manages the entire providing of legal services for this division, which includes a huge amount of things like multifamily, community lending, and business development teams. And prior to this, also within Fannie Mae, she was Chief of Staff to the Chairman of the Board of Directors and President and CEO. You can look at her bio in your folder and see that she has a string of other impressive titles inside this organization, which just told me she knows this business from inside out. But also interestingly, before Fannie Mae, she worked in the government sector with the Department of Housing and Urban Development, HUD. And before that, she was representing nonprofit groups, ACORN in particular, but other groups and their union pensions and investments and litigation on behalf of these poverty groups. So when I had the chance to talk to her a little bit before this meeting and find out, I thought, here's this amazing person. She's done nonprofits and government and now the private sector. I wanted to know what she thought was sort of the best that she had pulled from each of these entities. Without a moment's hesitation, she said, as far as the nonprofits, she said, I loved the passion of tenants for making their community into what it could be. And then we talked about HUD. She said, there's nothing better than having the power of the federal government behind you. But of course, then she said, and there are all those trappings that go along with it, like federal red tape and so forth. And then we came to Fannie Mae, and she said, what she loved was the speed with which you can respond with private capital. I thought, wow, do we have an incredible person to tap for her information tonight with that kind of accumulation of wisdom and experience. And then just as an aside, I said, I'm so curious, where did you get your law degree? And she said, Tulane University in New Orleans. I said, boy, I bet there's a whole bunch of discussions you could have about trying to renew and revitalize that city. I think of Bozeman trying to deal with its one high school and where we go next, and listening to the news about New Orleans and the scale is so huge. But I suddenly realized, we're into a whole different discussion that could go on for hours. So I ask you to join me in welcoming Ann Segrist McCullough. I think we're so great to have her expertise in our state this weekend. Thank you.
Thank you, Dorothy. I really appreciate that nice introduction, and I really thank the Wheeler Center for having this conference and inviting me out here. I do have a confession to make. In a sad, inevitable bowing to old age, I have now gone to trifocals, And while in the past I used to be a master of reading speeches without everyone even noticing that I was reading, I cannot tell where I'm looking or what I'm seeing at this point, so bear with me, it might not be pretty as I stumble. But anyway, it is great to be here in Montana. It's beautiful, I love it, it's just a real treat. I grew up in Commerce, Georgia, which is a really small town about 70 miles north of Atlanta and about 75 miles south of Greenville, South Carolina, and that term commerce was something of an optimistic statement. The legal jobs in town were working in the cotton mill or raising chickens or working in the poultry processing plant, but the real money was to be made in chop shops and bootlegging. Now the mills have left town and chickens are still there, but they've got the outlet malls. And really what it's become is a far distant suburb for Atlanta as working families drive 70, 80 miles trying to find a place they can afford to live while working in Atlanta. And I suspect that's not much different from a lot of towns in Montana at this point. I also have a number of vivid associations with the state of Montana. My baby sister was the envy of all of us because she chose to go junior year abroad in a very exotic and enviable way. She went to University of Montana. I had gone to England, and she decided she'd go me one better. Although she did say the people in Montana thought she talked funnier than the people in England thought I did. But nonetheless, she adored it, and I now have my 14-year-old with me here on this trip because he's convinced that he must go to college at Missoula. Although Dorothy has told me he's wrong and that he should come to Bozeman, which would be a much, much better place to be. Then, having listened to Susan's stories, she persuaded us we had to go hiking in Glacier, so we did 14 years ago in August. I don't know if y'all remember that, but it was 2 feet of snow, the most snow y'all have had in 100 years in August in Montana. So there we were in our shorts and our T-shirts and really enjoying the hiking and the weather. But it was beautiful. We loved it. It was exciting. But probably most of the time right now I think about Libby. You may know something about it. It's northwest of here. The old vermiculite mine closed, and a lot of members of the people in the community got sick from asbestos. Some of the jobs left, although some new jobs are coming possibly with the silver mine. A lot of families are hurting, and the economy is hurting. But it's so beautiful there that people keep moving there. They come from California and Oregon and Washington, and they build second homes and retirement homes and little ranches. And they're driving up the price of land so that the people who are holding on are having a tough time finding a place to live. One day, our CEO, Dan Mudd, got a call from Senator Baucus, who's very persuasive, asking if Fannie Mae could help in Libby. And we said yes, not just because the senator is terribly persuasive, although in part, but because this is exactly what Fannie Mae was chartered to do, which is to tackle tough affordable housing issues. So Dan put together a task force, put me from Washington as one of the people, because after all, I had been here, and Mary Lou Affleck from our Montana office, and Maureen Rood, and a number of us got together and went to Libby, and we're putting together a plan that includes grants and assistance and tools for lenders and affordable housers. And most of all, we're taking the lead from the people of Libby. Growing up in a small town, I know one of the scariest things is to hear that someone from Washington has come to help. So we know it's important to listen to what we can do for you. And really, Libby is helping us because the housing issues you see playing out there are pretty common in rural communities across the country. All over you see losses of jobs as farms and factories and mines close up. You see a lot of environmental disasters. You see a lot of people hurting with a dwindling supply of decent, affordable homes to build. And so while no two communities require the same solution, the things that we learn and work on in Libby do help us in other communities around the country. So we appreciate having the opportunity to work with y'all and learn from what y'all are doing. Tomorrow's speakers will primarily focus on affordable housing here in Montana, but I'm going to give you pretty much a national perspective. My job is to talk about what Fannie Mae sees, and we have a pretty unique perspective. We own or guarantee about 1 out of every 4 mortgages in the United States, in all 50 states. We touch about 55,000 single-family mortgages here in Montana and have about $100 million invested in multifamily housing here in Montana, about $6.8 billion overall for us here in Montana. Given our national book of business, we keep a pretty close eye on the U.S. housing market and how the homeowners whose mortgages we touch are doing. And what I can tell you goes a little against the title of my speech. When it comes down to it, I don't have a lot of really discouraging words to tell you about housing. Although we can all admit housing's going through a tough patch right now. We all see the headlines. The long housing boom is busted, the party's over, and the hangover's begun. Subprime lenders are going bankrupt left and right. Home prices are falling, home sales are falling, unsold inventories are up, and builders are cutting back. And worst of all, millions of American families who barely squeaked into homes using exotic adjustable rate subprime mortgages are worried sick about their payments spiking and possibly losing their homes. That's not the American dream we're used to hearing about in recent years, and it's a far cry from cable TV shows like Flip This House. But it's not all bad news. In fact, if you look at the economics, you can see that this correction was way overdue, and I hope it's going to be healthy for housing in the long run. To give you a sense of the national trends, I'm going to focus on 5 basic questions. The first is, after the boom and fallout, what's the state of housing today and in the next 3 to 5 years? And where are the hot spots where people are most worried about what's going on? As we all know, housing market surged between 2001 and 2005 for several reasons. 2 are sustainable and 2 aren't. The first is we had a growing economy, which was sustainable and can be sustainable. Second, we had good housing demographics. We have a growing population, and that's going to continue. Third, we had record low mortgage rates as the Fed eased interest rates to prevent deflation. That's not sustainable. Finally, as home prices continued to rise, we had rising investor activity in the housing market to record levels, and that's completely unsustainable. The combination of these factors resulted in successive record years for home sales and double-digit house price gains, both of which are unsustainable. And the housing market today is in the middle of a correction and working off these unsustainable trends. Home sales fell by more than 10% last year and are likely to drop by nearly this much this year. Single-family housing starts plummeted by nearly 15% last year and are expected to drop by almost 20% this year because unsold inventories remain near record levels. I'm on a housing board with all the CEOs of the big developers, KB Homes, Toll Brothers, Hovnanian. And if you want to go to a depressing meeting, you spend a lot of time with the Toll Brothers this week. It's, you know, when you do the scale they do, it's a tough place in the economy for them. House price gains have nearly ended on a national basis, with some areas seeing big gains, some seeing big losses. It's not a smooth picture. And we do expect a drop in national house prices for the first time in decades in 2007, and maybe the first time since the Great Depression, although records aren't clear enough to let us know for sure. After we get past 2007, the market should be in better balance. Still, it's likely that the market over the next 3 to 5 years will look similar to 91 to 95. There'll be slow gains in home prices and in home sales, and in general, house prices will climb below the rate of inflation. Not necessarily a bad thing for affordable housing. There are 2 particular areas of concern right now. One are the previously really hot markets that saw a lot of investor activity, especially where there aren't jobs and immigration to support that sort of investment. An example of that is Naples, Florida. In Florida, in many areas of Florida, they have something like 52 months of housing supply at this point. There are developments and properties that will never be sold in Florida. The second area of concern are those markets that are in recession, especially with significant outmarket, and this is where your outmigration, this is the Rust Belt, this is Detroit. And again, fundamental economics just aren't on their side. They don't have the jobs, they don't have the people, they can't sustain their housing situation. The second question is this correction generally a good or a bad thing for affordable housing? And where is the affordability gap right now? Where do we see it going with this? Nationally, the National Association of Realtors Composite Affordability Index dropped by more than 29% from its recent peak in 1999 to its bottom last year. This drop in affordability greatly reduced the number of potential home buyers, particularly the first-time home buyers. Moreover, the drop hasn't been uniform. Affordability is still high in the Midwest, where median existing home prices are about the same today as they were in 2000. And affordability is not surprisingly still at near record lows on the coast, particularly in places like San Francisco, where the affordability there is about comparable to what it was in 1980, where mortgage rates were near 20%. We expect there will continue to be an extended period of below-trend house price gains. And although this low increase in house prices won't be sufficient to allow housing prices and the rate of income gains to catch up and get in full balance, it will bring affordability back up, particularly in the highest cost areas. Which leads to the third question. What are the best places for working families to be homeowners? Places where incomes and home prices generally are in balance. Well, there's no great surprise there. The coasts are horrible. Always have been, always will be. Boston, New York, LA, San Francisco. What you pay for a condo there would buy a 10-acre spread in Commerce, Georgia. The average home price in Manhattan is now over $1 million, and that'll get you a 2-bedroom condo, not necessarily in a nice building. During the recent boom, the sharp increase in house prices relative to incomes generally occurred on the coasts, in large metropolitan areas throughout the country, with a few exceptions, and in popular vacation and retirement locations. Those are also the areas that had the highest increase in supply, and a somewhat unusual combination of high supply and high prices. In much of the rest of the country, especially in the Midwest and the Southeast, house price gains and income growth were much closer together, and so affordability remains reasonably good in those markets. Not great, but reasonably good. Although, again, they're weird patches. In the past year, house price gains have surged in Utah and Wyoming, substantially reducing affordability there. Over the years, Fannie Mae's national housing surveys have shown that people quite often make tough choices to change jobs and move just to afford a house, or to commute long distances in order to have a home and keep their job. And we think people will continue to have to make those tough choices. But that does lead to the fourth question, which has to do with housing finance. What about the subprime meltdown, and how is that going to affect most working Americans? What effect is it having on housing finance generally? How many people are headed for default? The biggest problem with subprime is the potential for payment shock, and for when the rates adjust, because the majority of loans in the subprime market are 228s, which is adjustable rate loans that start with unnaturally low initial teaser rates, where the required payments are lower than the interest that's accruing, and then after 2 years they start adjusting annually for 28 years. There's nothing wrong with the 228 per se. For some people, particularly people who expect their incomes to go up significantly, or just want to manage their finances that way, it could be a reasonable product. But that's not the typical profile of people who are getting these mortgages. And if you have tight incomes and spotty financial histories or credit records, or simply not enough information to know what you are signing, a 228 can be a disaster. You can see the problem. The borrower is simply putting off the interest payments. And if he's qualifying for the loan based on his ability to pay the first 2 years, then the lender didn't really underwrite the borrower's ability to be a successful homeowner over the long run. A typical 228 ARM for a borrower with subprime credit might start with a rate of 7.5%. Subprime is expensive, but the borrower was probably only paying 1 or 2% of those first 2 years and deferring the rest of the interest that was due. And then after 2 years, the rate could spike to 11% or more. We don't know where interest rates are going. And there goes your money to pay the groceries and the utilities and the gas to get to your job. The mortgage industry estimates that $1.5 trillion and 2/28 are set to adjust in the next 2 years. Pretty big chunk of people. And the question is, what's going to happen and what's the impact going to be? And it depends. You have to look at the share of the current subprime borrowers with upward adjusting arms who could refinance into a loan with both a lower rate and lower risk. Second, you have to look at what share of homeowners who would have gone into a subprime loan at this point could today use a prime or a near prime loan. It's hard to answer these questions with complete certainty because about 50% of the subprime market loans have gone into securities, and the data on those are publicly available, so you can see what the risk profile is. But for the other 50%, those are held in depository portfolios, and we don't know what those look like. But we guess they're probably better, actually, than the ones that were securitized, at least from a credit risk perspective. It's also hard to know what credit, payment ratio, loan-to-value ratio, and other underwriting criteria lenders will use as cutoffs for refinancing the current subprime borrowers or extending new credit to potential subprime home buyers. Our best guess at Fannie Mae is that something like half of the current subprime borrowers could move to prime or near prime without too much difficulty. And a similar share of potential home buyers who would have gone into the subprime market can today qualify for a prime or a near prime loan that doesn't have the same risk profile. We're working on some ways to help, and I'll discuss those in a minute. So is there any good news? Well, it's hard to describe good news when you're talking about delinquencies and possible foreclosures. In some neighborhoods, you're seeing that as families get into trouble, they're still able to sell their homes and get out with their credit relatively intact and their house being sold to a family who can take it over. In other neighborhoods, and we see this in whole neighborhoods, the amount that families own can't come close, the amount that families owe can't be covered by what they can sell their house for. And you see whole neighborhoods that frankly are being abandoned and falling prey to vandalism and just being destroyed. We recently did a tour through parts of Texas and literally went in different suburbs around Dallas and that had been completely financed using subprime financing. And it really these were tales of two cities. There were communities where families could, in fact, refinance or sell their way out of trouble, and others where values had fallen enough where they had no hope. Subprime delinquencies have risen to about 13% by the end of last year, still below the 15% peak that we saw in 2002. It's pretty clear the delinquency rate is going to rise past 15%, although the growth that's expected in incomes and jobs should ease some of the payment shock, unless, of course, we have a recession, which makes me feel like an economist with three hands, right on the one hand, on the other hand, on the third hand. But whatever happens, I mean, one thing you have to consider is, by and large, at the end of the day, most delinquencies never make it to foreclosure. Lenders typically work with borrowers to recast the loan, create a period of forbearance, allow a short sale. At the end of the day, it is in no one's interest to go to foreclosure if you can get any other solution that will keep a family in a home where they can perform financially. And so lenders are incentivized to work it out, and we support them in that. So what happens with all these defaults on the horizon and subprime lenders going under, and what does this mean for expanding mortgage credit to new homeowners and underserved and new Americans? Well, the history of mortgage credit in this country is one of constant expansion. Somehow during the 20th century, the old joke about mortgage finance and about banking turned on its head, right? That a bank will only loan money to somebody who doesn't need the loan. In fact, financial institutions have realized that's not the right business model, and they've realized that anyone who works hard and pays their bills on time can be a good bet and a great customer. Along the way, we've learned a lot more about borrowers. The industry's changed and has developed new lending standards that make a lot more sense for hardworking Americans. For example, 12 years ago, Fannie Mae developed a 3% down payment mortgage. Everybody told us we'd lose our shirt, that people who only had 3% at stake were going to walk away in droves, and that these weren't good borrowers. And of course, we haven't lost money. These have become our best borrowers. They've repeated. They've gone on to their next home. A 3% down is an old standard at this point. At this point, people are putting down 0% and getting loans from their relatives to pay the closing costs. And these are people who are and are becoming good borrowers. So the old rules have been turned on their head, and in some good ways. A similar good thing is happening in subprime. There used to be a very bright line between prime and subprime. If you had perfect credit, you could get a great interest rate in a loan. If you had any unpaid bills on your credit report, you'd pay a much higher rate if you could get a loan at all, period. But now, thanks to a lot of underwriting technology where, frankly, we can dice and slice and understand how consumers behave a lot better, you can get more loans and better loans across the credit spectrum. Somebody with a 600 FICO is going to be able to get a loan at just slightly more than a 700 FICO, and can still get a loan that they can afford. And that's important because the subprime or non-prime market has become a critical source of mortgage credit for people who aren't blessed with a standard definition of flawless job, financial, or credit histories. Frankly, many of the households who have been denied a chance to buy a home in the past are now today's best borrowers. And frankly, those people with bad credit histories, the blemishes, the late payments, include pretty much every liberal arts major that I graduated with, so, and I'm not telling you my own FICO score. So back to the basic question, how will the turmoil in subprime affect the expansion of mortgage credit? And for a big part of the answer, let's go back to Washington. You know that whenever housing gets a cold, affordable housing gets double pneumonia, and it's not pretty. Affordable housing is the bedrock of our economy and our communities. It's not a good thing when an average wage earner can't afford the average home in their community. And policymakers in our nation's capital understand that. And you're seeing this understanding reflected in a lot of the government response that we're having right now to the subprime crisis. Federal banking regulators are about to issue new guidelines for adjustable rate mortgages with teaser rates. Essentially, you can't underwrite a borrower based on whether or not he or she can afford the 1 or 2% teaser rate for the teaser period. You've got to underwrite based on whether or not they can afford the loan for the life of the loan and whether or not they can pay the principal and interest over the long run. The industry is already tightening up this way. This will save a lot of consumers from signing loans that they can't afford. Unfortunately, that also means that some borrowers facing rate resets and payment shock might have a hard time refinancing into new loans. Meanwhile, Congress is taking steps. Recently, Senator Chris Dodd of Connecticut set forth a series of principles for the mortgage industry that most of us have agreed to. To mention a few, loan servicers should reach out to homeowners to see whether they're headed for trouble or not, and if so, then try to modify their loans. It probably won't surprise most of you, but most people who get in trouble in paying their mortgage never call their mortgage lender, never call their servicer. They wait until somebody's at the door. They hope against hope that they can dig their way out without talking to somebody. And frankly, at the end of the day, it's a bad approach because there's solutions available if they can reach out to their servicers. And putting the burden on the servicers to reach out to them actually sounds like the right answer to me. In addition to requiring servicers to reach out to borrowers and try to help them out of trouble, lenders have signed up to try to refinance qualified borrowers from subprime into prime rate loans at low cost. And the government-sponsored enterprises, Fannie Mae, Freddie Mac, FHA, are helping lenders to do that. At the same time, the Dodd principles recognize that while everything should be done to help homeowners avoid default, not everyone can be saved. And not everyone can afford to be a homeowner at the end of the day. Fannie Mae has a key role to play in helping bring stability to the market and help lenders help homeowners. We've just launched a company initiative we call Homestay. It includes flexible mortgage products to buy or refinance homes with underwriting guidelines that emphasize the borrower's ability to repay. It also includes flexible servicing policies that emphasize keeping people in their homes. We're also supporting homebuyer counseling and foreclosure prevention efforts. We have a web-based system called Home Counselor Online that we provide free of charge, so if you know anyone who can use it, let me know. And we're pleased to support the work of one of your panelists tomorrow, Sheila Rice. of NeighborWorks and their national foreclosure prevention initiatives and their foreclosure prevention initiatives here in Montana. Hi, Sheila. In closing, I believe we'll get through this rough patch because I believe in the American housing system. That's my takeaway after 25 years in affordable housing, whether as a tenant advocate for Georgia Legal Services or ACORN, whether it's at the Resolution Trust Corporation or at HUD trying to refinance the stock of affordable housing, and today at Fannie Mae, investing private capital to preserve and expand affordable housing. And all of this I've seen firsthand the really brilliant ingenuity of our system, driven by private, public, and nonprofit sectors working together. One of my favorite affordable housers, Sister Lillian Murphy of Mercy Housing, always says, if you think you know what you're doing in affordable housing, you're fooling yourself, because as soon as you come up with a solution, something changes and you need a different one. So every year you have to reinvent the wheel. Every year you have to come up with a new patchwork of solutions. And inevitably that is going to involve good for-profits, good nonprofits, the government, and private capital like us. And at the end of the day, that's not a bad solution. It's still the case, though, that despite this ingenuity and all the best partners in the world, too many families still live in substandard housing. The affordable housing stock in our cities and our small towns continues to dwindle, and too many minority families have been denied the blessings of the American dream. Yet, for all of us who care about affordable housing in Montana or Commerce, Georgia, or across the nation, think those are great challenges and think we can come up with a new solution that works this year for this project and next year for that project and continue to do good work that gets us not to the end of the rainbow, but closer to our dream. Because our housing system continues to find new and better ways to expand the American dream. And I think it's because of a simple impulse, actually one described by a colleague of the late Senator Burton Wheeler, Franklin Roosevelt, who said, the country demands bold, persistent experimentation. It's common sense to try a method, take it, and try it. If it fails, admit it frankly and try another. But above all, try something and keep trying. We keep trying. That's what this conference is about. That's what all of you are doing. That's what I'm doing. And I'm glad to be here and part of it. Thank you.
And since you would be glad to take some questions, stand up when you have a question, and please, if you could introduce yourself, that would help us all, and have at it. We've got a wealth of information.
Yes.
Sandra Johnson, City of Troy. We're 18 miles from Libby,
Great.
and the EPA is there now.
Yep.
And they're going strong. We would love to talk to your agency as well.
Great. Love to talk with you.
So how do we get in touch with you, and what do we do?
Uh,
Start that.
It's actually quite easy to reach me. 202-752-7000, Fannie Mae's main number. Anybody can find me. Here in Montana, we also have Maureen Rood and Mary Lou Affleck, who work on a whole bunch of investments for us, both in Montana and around the country. And I'd be happy to get you their names or numbers. But
We will probably, I know we'll be calling you.
Great.
We have a
Please
lot of
do.
issues. We don't have any housing either. Thank you.
great. Yes.
And I'm Gus Byron with the Montana Department of Commerce.
Great.
And the other day at the library, I picked up an old National Geographic, 1976. It was all about Jackson Hole, Wyoming, and how are the cattle ranchers going to adjust to these newcomers discovering Jackson Hole. And it just seemed to me that's Montana right now, from the middle of our state, moving down to the west. So we're in the midst of this incredible transformation where the baby boomers are coming in to retire, and we have this huge, dichotomy, between the markets
Right.
and the wagers. Any comments on that?
Sure. Actually, I was just talking with Byron earlier today. I am a big believer in planning, and there are some communities that have done just great things. And one of the places I love to look when I'm looking for inspiration to see who has done what that I could actually apply in a different situation is HUD's Woodson Awards. HUD gives an award for some of the best ideas in affordable housing, development, preservation, and planning called the Woodson Awards. And you can actually go on the HUD.gov website and read through some of the recent winners. And it directs you to some of the best minds in affordable housing. Because, again, it's not that you can take the exact same solution and pick it up and take it from Jackson Hole to Missoula to Kalispell to Whitefish, but there are things you can apply and use again. And so I turn there early and often. I like a lot of the work that Homes for Working Families is doing. They're a new nonprofit in Washington that's very much focused on just that, working families, and making the connection between jobs and housing, and helping communities see that, in fact, housing is an economic development issue and a critical issue in maintenance of jobs. So I frequently turn to their website and call them up when I'm kind of struggling with something and say, okay, who are you talking to lately that's doing something great? I want to talk to them and see, what they're doing. Thanks. Any other questions I can answer? Yes?
My name's Amy Hall. I'm an attorney with Montana Legal Services in Helena. And I'm wondering if you have any thoughts about conversions of mobile home parks. A lot of my clients, if they can afford any kind of housing that they actually own, it's a mobile home.
Right.
And then because land prices in Montana are just skyrocketing, the owner of the park wants to sell to a high-priced developer and, kick all the homeowners out. Could you comment on that?
That's a great issue, and actually where you've seen a lot of interesting kind of cutting-edge work in that area is in Florida and also in the southern part of the California coast, where obviously, manufactured housing was good, affordable housing, but people were living, as you typically do in manufactured housing communities, in rented lots. But there's been a fair amount of effort to create homeowner co-ops in some of the manufactured housing communities in Florida and in Southern California. And they're seeing some good results. It's tough. It's very tough to put together the money. There are a lot of the nonprofits and the foundations have been giving grants in this area. MacArthur Foundation has been looking at this a lot. Our own foundation, which we've just folded into the company but is still continuing the work, has looked at this issue a lot. Because again, you are frequently talking about the most affordable housing in any community, and it will continue to be so. Yeah.
David Stanley is my name. I'd stand up if it was easier. So 69% of the people in Montana own the homes that they live in. Why is it in their interest to keep home prices down?
That's a good question.
Thank you.
At the end of the day, I actually believe that in every community, it's in your interest to have housing be relatively affordable, because the richer, better community will have, in fact, people across the spectrum. You want your community to have school teachers, firemen, doctors, lawyers, the whole spectrum in your community. And at the end of the day, an ever-increasing spiral leaves you with a much diminished community. Frankly, you lose your firemen, you lose your teachers, you lose your sales clerks. And at least for me personally as a homeowner, I don't feel enriched by that. I feel diminished. And with a reasonable, modest continued gain in home prices, you're still going to get a return on your investment. May not be as big as in some of the boom years, but by and large, except in the big investor regions, you're not going to experience a loss. So, just personal philosophy, but yes.
Thank you. I think that's great ethics, and it's totally pretty good economics.
Then don't rat me out to our credit people, okay?
I just wanted to add to Dave's question, to your answer. If you have children that are living at home,
I do.
it's time for them to let's leave the nest, and they can't.
Absolutely.
Well, it's in your interest that they
You know, I heard that a lot from families in Libby, actually. You know, they both wanted their children to leave their home, and then once they went to college, they wanted them to be able to come back home and have a place to live other than in their own home. And it's a tough issue for most families at this point. Yes, from Libby.
I'm Kathy Kinsey from Libby.
Yes.
Montana Human Resources.
Good to see you again.
Thank Fannie Mae for helping us in our community, the chairperson of the Lady Housing Task Force, and the good, wonderful things that are helping us play this. Thank you.
Thank you. Good to see you again. Any more questions? Yes.
Ken Deuce. You mentioned earlier in your comments, I think, about speculators in the housing market that have driven up the cost of housing.
Yep.
Is there any discussion of tax policy that might help that? You know, we have a tax policy that allows homeowners to sell a home every 2 years tax-free as an incentive to keep moving up or do
Right.
whatever reason, but it's a tax policy that helps the homeowner. Is there discussion of tax policies that could punish the speculator, the pure speculator, so that there is less incentive to cause housing prices to go up artificially or?
You know, honestly speaking, David Stanley would probably be better to answer questions on tax policy because he helped lead the Millennial Housing Commission and I think considered every possible combination of tax policy that could help us on affordable housing across the board. And y'all looked particularly not at the speculators, but at exit tax relief to help preserve affordable housing. And actually, we may get there this year.
It might. I don't believe that speculators are essentially bad. They're kind of like the people who buy derivatives. And the markets reflect the behavior of speculators. Speculators lose money as well as make money. And I don't believe that interfering in the private market for the purpose of eliminating speculators is a good idea. I think it's bad.
Yes.
Fannie is a speculator.
We are a big speculator in our only business.
I mean, they do things that are based upon the assumption that prices will change one way or another. And they influence prices.
Yes.
But so does Goldman Sachs, and so does Citibank, and so do you.
Yes, Deb.
Just to piggyback on that, rather than seeing us find some way with the taxes to punish speculators, I would like to see tax incentives that encourage or allow for affordable housing in the midst of more diversity in the housing as a development is put together, that it be more diversified in its housing opportunities so that instead of always being all big homes, it's a variety of homes and also more green space so that it's more conducive to families.
And, you know, that raises interesting questions of state and local taxes and federal taxes. On the federal level, major tax relief around affordable housing, we all know where the federal budget is. It's not going to happen. If we do get some improvement for multifamily owners this year, it will be because it's been a 10-year fight to get there. And the last really major federal action you got on taxes and affordable housing was the federal tax credit program, and that was 86. Was part of tax reform so it's been a long time since we've been able to get a tax program that supports affordable housing through Congress. Those types of incentives you see more often on the state and local level, and many communities have in fact enacted them. Again, it's pretty interesting to look at the communities that have done those incentives and see how it's paid off for them, some quite successfully. Yes?
I'm Judy Smith from Homeward. I would pick up one comment you made about not maybe everyone needs to be a homeowner.
Mm-hmm.
And I know we talked about this at Homeward, and I just would like to encourage everyone here today, tomorrow, to think about that. Why is that a particular value that we have ascribed? Personally, I think if we had rent control and some other things that some other people don't agree with, I might very much prefer to be a renter. And so I would just say that one of the things we've done, certainly in the financing of affordable housing, is to put an incredible amount of resources into promoting what is called the American Dream. I'm not really convinced it is. And if you look around the world, I'm not convinced that owning your own home and your own particular piece of property gives you a particular future that everyone needs to have. So just saying that for people to consider that when we're here at this conference, is the answer that everyone needs to own their own home? I'm not really sure it is.
Well,
Do you want to be a renter when I'm the landlord?
Depends on how you are.
You're going to want rent control,
That's what I said.
and I'm not going to want it.
Well, I'm saying I'm going to get it.
well, it is clear, though.
We've talked about it.
It-
To live anywhere in Montana is going to be here.
It is clear that homeownership is not the answer for everyone. And it is equally clear that most of us at some point in our life will be a renter. Across the life cycle, you rent. When you start out, you rent as you get older, when you're looking to empty nest. And for many, many, many working families, rental housing is their housing for their entire life. And so it is important that there be more decent, safe, affordable rental housing. And again, there are not a lot of incentives there. The federal tax credit program is the only federal production program for rental housing at this point. FHA is doing the best it can to service its existing portfolio, and that is diminishing by the day. There's no new federal money for affordable housing at all, for rental or for homeownership. So it's pretty critical at every end of the spectrum, but it's clear, homeownership does not work for everybody. And you want to have both options available for people at the right point in their life cycle. Yeah,
Doug Rothy with Northwest Human Resources, Kalispell.
yeah, great to see
You
you.
up in
Yep.
Libby a while back. And again, thank you for what you do.
Oh, thank you.
Question about if we're going to think outside the box and discuss whether or not home ownership is the American dream. What about house ownership being the American dream, and land ownership being community land trusts, and how would Fannie Mae work with that?
We've done a fair amount of work with people who are using community land trusts, and in a lot of different settings, whether you're talking about co-housing communities, whether or not you're talking about individual developments where you're doing sweat equity, like with a habitat program. And, obviously in Native American communities, you're frequently functioning in what is effectively a community land trust because it's tribal lands. And so it is, the price of the land is an expensive component in the price of housing. So if you have a way of holding down the price of the land, then you can in fact lower the overall cost. So we do work with communities who are using that as one of their solutions. It's a tough solution and doesn't work in every community, but it's a good one. Anybody else? Yeah.
I'm Dick Kane. I think maybe a question about history, I guess.
Sure.
What was the home ownership rate in the United States, say, in the 1920s?
Wow.
So before there was secondary markets and Fannie Mae and all the other tools we have. I think it was substantially less than it is now.
Well, it had to be substantially less because today we're at an all-time high in the 70s, right?
30%. Well,
Yeah.
I'm a member of a Rotary Club here.
Yeah.
We had a guest delegation from Pakistan. And they were all business people, including a couple of women who were bankers. And they were utterly fascinated by the American housing system. I think we underrate sometimes what we've achieved in this country. Sure, we have problems and things to address, but overall, it's been a remarkable achievement. And you might say it's probably one of the foundations of a democracy. When people at least have an opportunity to become a homeowner. They may not choose to, but they have a reasonable opportunity. The home ownership rate in Pakistan is less than 10%. If you want to buy a home, you have to pay for it.
Yeah.
There is no secondary market, there is no lending thing, and these people told us that if we could do anything to replicate close to what you have in this country, or the system you have housing in people's hands, that would stabilize that country and give them a much better chance for education, stable political system, et cetera. So if we export anything in this country right now, I think it should be our housing system. Teach people how to do it.
You know, in a slight advertisement for us, but not really, we used to do that. We used to consult with countries all over the world, and we had a group that didn't make, just a big money-losing group, actually, that went around the world consulting on how you set up secondary markets, how you do housing finance. HUD felt it was outside our scope to do that and asked us to shut it down, so we did. 6 months later, the Secretary of HUD called us and asked us if we'd go to Africa and help them, and we said we can't. We fired all those people. But nonetheless, I do think it's fairly exciting what we've done. My grandfather lost his family farm because he had a 5-year balloon note, as everybody did before FHA and Fannie Mae were created. The 5-year balloon was all that was available. So you could buy as much as you could afford to refinance every 5 years, but if the bank failed and there was nobody to give you that next loan, the game was all over. It was musical chairs and everybody failed to get a chair. So, you know, in my family, we feel romantic about the 30-year mortgage, fixed rate mortgage, and because we see how it's changed life for us. And we can see how it's changed life actually for everybody else in this country. So, yeah, it's pretty exciting. I obviously need to get out more if I'm saying that, sorry. Any more questions?
Many, many thanks.
Thank you. This was great.
Data-driven conclusions are always the most persuasive, and that's what we got this evening, and I really want to thank Ann McCulloch very much for coming. I think we have a wonderful program together tomorrow. Some of you are going to be on it. I'm very much looking forward to it. We're starting very early, 7:45. If you'd bring your packet of materials with you, we'd very much appreciate it. We look forward to a terrific day of discussion, and I'll see you all there tomorrow morning. Oh, just a second. I forgot something.
And those of you who are from Missoula, if you have any materials to share with the group, and pamphlets, brochures,
Oh, I forgot.
if you have a written form that you'd like to bring and share with the group, please do that. We'll have a table, set that information out, so if you've got anything, please just bring it and share it. Feel free to do that.
Thanks very much for reminding me, and we'll see you tomorrow morning.
Do it all. And so, another great pleasure this morning is for me to introduce the person who is the chair of the Wheeler Center Board of Directors, Dr. Bill Teets. He is the former president of Montana State University in Bozeman, and I am going to ask him to come up to the microphone now, and he's going to start us off this morning. So, Dr. Bill Teets, thank you.
Thank you, Julie. Very, very great pleasure to welcome you all on behalf of the board of the Wheeler Center. We are presenting forums for the discussion of public issues, public policy, and are dedicated basically to an educational culture. We pride ourselves in being nonpartisan, and I'm certain there are those in the room who would assume that since we're coming from Bozeman that we're not partisan. But we try. And we are politically nonpartisan, in spite of the fact that we have loyalties to the institution that gives us a sponsorship. We've had previous programs that I think were of significant interest to the state of Montana. Taxation and reform. We had some issues on water, on academic freedom. A wide variety of programs that have affected the institutions as well as the public policy of the state. And we would like to emphasize the fact that we are a civil discussion group and try to present as many of the sides to a particular problem and controversy as are available. Why Burton K. Wheeler? Why Burton K. Wheeler Center? I would like to ask Bradley Snow, who is the great-grandson of the Senator Burton K. Wheeler, to give a brief synopsis of our background in terms of Mr. Wheeler. Bradley?
Hi, good morning. Thanks everybody for coming out. I'm Burton K. Wheeler's great-grandson, and I've been associated with the center for 16 years, ever since I moved to Montana in 1991. I'm just going to say a few words about my great-grandfather in the center. Burton K. Wheeler was a consistent supporter of free speech and freedom of the press throughout his long and storied career in law and politics. As Corky indicated with his story last night, Wheeler didn't just support these rights when it was easy or convenient to do so, but as he did in 1918, often when by doing so he risked his own political future and even his personal safety. In 1917, BK, along with other Butte attorneys, helped arrange for a $12,500 loan that enabled the startup of an independent, labor-oriented daily newspaper that some of you may have heard of, the Butte Bulletin, to compete with the Anaconda Company run dailies in Butte that blanketed news coverage there at the time, in Butte and Anaconda. Wheeler believed that the people of Butte and Anaconda deserved an independent view of the news and a voice on the important issues that faced them. During his entire tenure in politics,